Beneath the headline. That's our topic on today's Backstage Pass. Well, hey friends, hope you're having a great day so far today. Stocks here at midday are mixed again, but mortgage bonds are up today. This is the third straight day in a row. Some news out of Europe and some news domestically that have pushed bonds up. We'll talk more about that in just a minute. But where we're at right now, mortgage bonds are trading. They're up about 42 basis points on the day. They pushed up above a ceiling of resistance, which was the 25-day moving average, and there's still some more room to the upside, so we could see mortgage bonds continue to go up. The 10-year yield is down 7 basis points right now, and it's trading at about 3.94%. The national average for a 30-year fixed-rate mortgage yesterday, that came in at 7.07%. Didn't quite make it under that 7% level, but the way that bonds are moving, we could see that happen. So what's pushing the bonds? What's happening in the markets? First of all, over in Europe, the ECB, the European Central Bank, released what was considered a dovish announcement. They raised their equivalent of the Fed fund rate over there at the ECB, their overnight rate, by 75 basis points. But they also said they're doing some buybacks on bonds and treasuries. So the bond market in Europe perceived that as a dovish announcement. We saw yields for treasuries in Europe go down, and in the United States, yields went down as well. So that's why we see that 10-year yield kind of marching down. The other thing, we got quarter three, gross domestic product. This is the advanced reading, or the first reading for Q3 GDP. There'll be two more readings that come out. But this first reading showed that the economy grew by 2.6% in quarter three. But if you dig underneath the headlines, there's certain pieces of the economy that really grew. Exports grew, but other things didn't grow as much. And so also other news that came out today that are just underneath that GDP headline, when we had core durable goods for the month of September. Core durable goods decreased by 0.7%. That was much lower than what was expected. It was actually expected to increase by 0.3%. So a little bit of a sign of a slowdown there in durable goods. And then shipments. Well, shipments also slowed down a little bit as well. And that's important because that's an indicator of how much is being purchased by the amount or volume of shipments that are going on. So core durable goods and shipments showing some signs of shrinking and slowing, and those two things actually get factored into GDP as well. And so we could see some revisions to GDP. The next revision, we could see a shrinkage, some slowdown, and the following revision, the final revision, we could see that 2.6% start to come down. Those were the things that moved mortgage bonds today, and that's why mortgage bonds are higher right now. Now, tomorrow we get PCE, personal consumption expenditure. And core PCE, this is the Fed's favorite measure of inflation. Right now, it's expected year over year to be up by 5.2%. That's the expectation. And, really what's going to happen tomorrow and what we expect to happen is we expect the mortgage bond market to not be surprised by this rise at all. Why? Because they priced in CPI data 2 weeks ago. CPI data showed the same kind of increase or a similar increase, and so the markets have priced that in already. We're expecting the PCE data to not bring us any surprises, and this is exactly what happened last month as well. When CPI data came out, the bond market priced it in, and then when PCE data came out by the end of the month, the bond market just handled it, in stride basically. That's what we're expecting to see tomorrow. Now, that's all the news that we have for today. Don't forget, stay positive, have a great day, and we'll see you tomorrow.